All right, looks like we've got quite a stack of sources for this deep dive.
Yeah, lots to unpack here.
Global trade, some big moves in tech, even AI companions. You ready to jump in?
Absolutely. Let's do it.
First up, a story that might surprise a few folks out there. Mexico, believe it or not, has just become the U.S.'s biggest trading partner.
Yeah, it's a shift we haven't seen in over 2 decades. I mean,
Mm.
China's been the top dog for so long.
So what's driving this change? What's going on?
Well, a few things really. There's the trade tension between the US and China, which is kind of pushing companies to look for other places to, well, make their stuff.
Right, so they're looking for alternatives.
Exactly.
Yeah.
And that's where this idea of nearshoring comes in. Basically, moving production closer to where the customers are. And in this case, it's Mexico that benefits because it's right next door to the US.
Mm, makes sense. So less about tariffs, more about logistics.
It's both, actually. You see, moving production to Mexico means businesses can avoid those big tariffs on Chinese goods.
Uh-huh, so a double win, sort of.
You can say that. But there's another layer to this whole thing. Some Chinese companies, they're getting clever. They're actually using Mexico as a way to, well, kind of sneak around those U.S. tariffs.
Sneak around. How
Right.
so?
Well, they're setting up shop in Mexico, maybe just modifying goods there, and then they can export them to the U.S. without those tariffs because of the USMCA, that trade agreement.
Okay, this trade triangle is getting pretty interesting. But what does it actually mean for, say, the average person listening?
Well, you might start seeing a lot more made in Mexico labels on products. Could lead to a more diverse supply chain for the U.S., which is generally a good thing.
More options, right?
Exactly. And this shift also opens up some interesting investment opportunities in Mexico. But of course, there are challenges too.
Like what?
Well, relying on one country for so much can be risky, especially if there are any, say, political shifts or logistical problems in Mexico.
Right, makes sense. It's almost like a game of economic chess, isn't it? Every move has consequences.
It really is. In the long term, who knows? We might see the U.S. and Chinese economies kind of drifting apart, leading to more regional trade blocs.
Interesting. Now, shifting gears a bit from global trade to global conflict, let's talk about this situation in Ukraine. Things have taken a bit of a turn there, haven't they?
Yeah, with Ukraine now hitting targets deep inside Russia with those long-range missiles supplied by the U.S.
Yeah, that's a big development.
It is. It really shows a change in Ukraine's offensive capabilities. We're talking about weapons like the 8ACMS. They can hit targets over 190 miles away. And then there's the Storm Shadow cruise missiles. They're known for their precision and range.
So these weapons give Ukraine the ability to hit, well, targets they couldn't reach before, like command centers, supply lines, even air bases deep within Russia.
Exactly. And of course, this has a lot of people concerned about, what Russia might do in response. I mean, they've issued warnings and condemnations, but so far their reaction has been, well, a bit muted.
That is interesting. So what do you make of that? Is Russia holding back on purpose, maybe trying to avoid escalating things further, or is it more about limitations in their military?
It's probably a mix of both, to be honest. Russia might be hesitant to expand the conflict, especially with NATO involved, and their military resources might be stretched a bit thin right now. But it's a very unpredictable situation. Any misstep could have some serious consequences.
Absolutely. Okay, let's move from the battlefield to something, well, a bit more positive. Singapore. How did this tiny little island nation become one of the richest in the world?
Singapore's story is really remarkable. Strategic planning, adapting to change, strong governance, it all played a part. They went from a colonial trading port to a global financial powerhouse in a surprisingly short time.
I mean, they don't have many natural resources, right? So they had to get creative.
They did. Their founding leader, Lee Kuan Yew, he had a vision. Policies focused on economic growth, attracting foreign investment, building a highly skilled workforce. They focused on industries where they could really excel, like manufacturing, finance, and technology. And their location, right on the Strait of Malacca, that's a major shipping route.
So location, location, location.
Exactly. It turned Singapore into a global trade hub. But of course, it hasn't all been smooth sailing. There are challenges, rising living costs, restrictions on civil liberties, an aging population.
And now they have a new prime minister. So what changes might we see under his leadership?
Yeah, Lawrence Wong took over earlier this year. It'll be interesting to see how he tackles those challenges. Will he focus on economic growth, like his predecessors? Or will social issues take priority? Only time will tell.
Okay, let's talk about leadership of a different kind. The world of tech titans, political power plays, Elon Musk, and, well, Donald Trump.
Now, this is where things get interesting. Musk has become a major player in politics, especially with Trump potentially heading back to the White House. His platform, X, formerly Twitter, of course, it played a huge role in amplifying Trump's messages during the campaign, gave him access to a massive audience, particularly younger voters who, well, they admire Musk.
Right. So what's Musk's game here? Is it all about business, hoping for favorable treatment for his companies like Tesla, SpaceX, Neuralink?
That's definitely a possibility. Those companies operate in heavily regulated industries, so a friendly administration could be very beneficial. But some people think Musk's ambitions go beyond just business. They believe he wants to actually reshape the political landscape, use his influence to challenge certain ideas and push his own vision for the future.
It definitely raises questions about the influence of tech billionaires in politics. What are the potential consequences for the rest of us?
That's the big question. When individuals have so much wealth and technological power, it's important to think about how they use that influence. How does it impact our democratic processes and how we communicate with each other? This is a conversation we need to be having.
For sure. Now, for something completely different, let's rewind the clock a bit and talk about the rise and fall of a true American icon, TGI Fridays. How did this once thriving brand end up, well, filing for bankruptcy?
It's a cautionary tale. TGI Fridays, they started as a popular singles bar back in the 60s and 70s. Lively atmosphere, skilled bartenders, signature cocktails. But then in the 90s, they decided to shift their focus, try to become more family friendly.
Yeah, I remember that. Seems like a logical move, appeal to a wider audience, right?
I'd think so. But it really diluted their brand. They alienated those core customers who love the original vibe. By trying to be everything to everyone, they ended up being, well, nothing special to anyone. And that, combined with some risky financial decisions, led to their downfall.
Risky financial decisions. What kind of decisions?
They adopted a strategy called whole business securitization. Basically, it tied their franchise royalties to debt repayment. Sounds complicated. And it is. It can work when things are good, but it makes you extremely vulnerable during tough times.
So when the recession hit in 2008 and then the pandemic in 2020, their sales took a nosedive and they couldn't keep up with their debts.
Exactly. It shows how even big, successful businesses can be fragile, especially in an industry like the restaurant business where things change so fast. Staying true to your brand, adapting to consumer preferences, and making smart financial decisions, it's all crucial.
Okay, let's switch gears one more time. AI companionship. We're not just talking about simple chatbots here. We're talking about AI designed to provide emotional support, advice, even mimic human emotions.
This is a field that's advancing incredibly fast. Raises some really interesting questions about the role of technology in our lives. There was this experiment where people spent 24 hours in the woods, completely isolated, with nothing but an AI chatbot for company. They interacted with chatbots from Google, Microsoft, even Meta, which had one built into its Ray-Ban glasses.
Wow, 24 hours alone in the woods with just a chatbot. That's something. So what were the results? Did these AI companions live up to the hype?
It was a mixed bag. Some people actually enjoyed the experience. They appreciated the companionship, the support the chatbot provided, especially in that kind of isolated environment. But others found the interactions, well, a bit superficial. It just wasn't the same as connecting with a real person.
So we're not quite there yet in terms of AI replicating genuine human connection. But it's clear that the technology is evolving rapidly. What kind of impact do you think this will have on our relationships, on how we interact with each other in the future?
That's a really important question. As AI gets more sophisticated and more integrated into our lives, we need to think about its potential impact on our social fabric. Will it help us connect more, or will it lead to more isolation? We're heading into uncharted territory here.
Uncharted territory indeed. Okay, let's wrap up this first part of our deep dive with a look at another tech giant that's doing pretty well these days. NVIDIA, the undisputed champion of the data center GPU market. Their revenue now surpasses Intel and AMD combined. What's their secret?
Their success is really tied to the rise of artificial intelligence. Their GPUs are designed specifically for the kind of complex computations that AI requires, machine learning, deep learning. You could say they're supplying the building blocks for the AI revolution. And demand for those chips is going through the roof across so many different industries.
So they basically saw the AI wave coming and positioned themselves perfectly to ride it.
Exactly. They've invested heavily in research and development, formed strategic partnerships, and constantly expanded their product line to meet the demands of the AI world.
But they're not the only players in the game, right? Companies like AMD and Qualcomm, they're also making big moves in AI.
Oh, absolutely. The competition is fierce. Other chip makers are definitely trying to get a piece of that pie. Qualcomm, for example, they're focusing on AI in cars and the Internet of Things, powering drones and smart cameras and things like that. But for now, NVIDIA, well, they're definitely in the lead.
Speaking of NVIDIA, there's this story about their CEO, Jensen Huang, and a missed opportunity that's been making the rounds.
Ah, yes, the one about Masa Son's offer.
That's the one. Give us the details.
So back in NVIDIA's early days, when they were still pretty much unknown, Masa Son, the founder of SoftBank, he saw their potential, became an early investor.
Masa-san, he's known for having a pretty good eye for these things, so that says a lot.
It does. And at one point, he actually offered to lend Jensen Huang money to buy even more NVIDIA stock. That's how much he believed in the company.
Wow, that's confidence. So what did Jensen Huang do?
He turned him down. He later said it was a missed opportunity, and you can't help but wonder what might have been if he had taken Masa Son up on that offer.
It's a good reminder, I guess, to seize those opportunities when they come along, even if they seem risky. Sometimes the biggest regrets are the chances we didn't take.
Couldn't agree more. Especially in the tech world where things move so fast, you have to be bold, trust your instincts, and take those calculated risks.
All right, from missed opportunities to the challenges of breaking into a new market, our final deep dive takes us to the world of coffee, where Starbucks is facing some stiff competition in China from a local rival, Luckin Coffee.
This is interesting because Starbucks, with their personalized coffee experience, that third-place atmosphere, and their premium prices, they've really struggled to replicate their success in China.
What is it about the Chinese market that's so different?
Well, in China, coffee is often seen more as a quick energy boost, not so much a leisurely experience. And Chinese consumers, they tend to prioritize affordability and convenience, which plays right into Luckin Coffee's strategy.
So Luckin Coffee is doing things differently to appeal to those preferences.
Exactly. Their menu is more streamlined, not as many customization options. Their prices are way lower than Starbucks, and they've really focused on delivery and mobile ordering, making it super easy for customers to get their coffee fix on the go.
Sounds like they've really tapped into what Chinese consumers want. So how is Starbucks responding to this challenge?
They're trying different things, experimenting with smaller stores, expanding their delivery options. They're even thinking about selling a stake in their China business to private equity firms.
It'll be fascinating to see if they can adapt and regain their footing in that market. It's a tough one.
It really shows that even global giants like Starbucks need to be flexible, willing to adjust their strategies if they want to succeed in different cultures and markets.
Absolutely. So before we move on to the next part of our deep dive, we'd love to hear from you. What are your thoughts on all of this so far? What surprised you? What questions are you left with?
Take some time to think about it, explore these topics further, and hold on to those questions. We'll be back soon to continue our deep dive and explore these fascinating stories in more detail. Welcome back. It's really amazing how all these stories we're talking about, they seem so different, but they all touch on this idea of, well, adapting and changing with the times.
Right. It's all about evolution, isn't it? Whether it's global trade patterns shifting, tech companies battling for dominance, or even something as simple as a cup of coffee.
Yeah, it's all about finding a way to survive and thrive in this constantly changing world. And it really highlights the power of, human ingenuity.
For sure. We're seeing entrepreneurs like Elon Musk pushing the limits of innovation, companies like Starbucks trying to figure out new markets. It's all about adapting.
And sometimes that means taking risks, embracing new technologies, even questioning those old ways of doing things.
Like those people who spent a whole day in the woods with nothing but AI for company. That's pretty wild.
Yeah, that experiment really pushes the boundaries.
Hmm.
And while AI companions, they might not be ready to replace human interaction just yet.
Right.
But it does give us a glimpse into a future where, well, technology could play an even bigger role in our lives.
It's both exciting and a little bit scary, isn't it?
It is. But one thing's for sure, the world is changing faster than ever before, and if we want to keep up, we got to be ready to adapt.
Speaking of adapting, let's go back to TGI Fridays for a minute. I keep thinking about that story, this once iconic American brand just falling apart. How does a place that was so popular, known for its good times and fun atmosphere, how does it end up going bankrupt?
It really is a classic example of a brand losing its way. TGI Fridays, they did so well at first as a singles bar. It was the place to be for young professionals to meet up after work, unwind, have a good time. They had those really well-trained bartenders, that lively atmosphere. They even created some of the most popular cocktails that we still drink today.
Yeah, I remember.
But then, in the 90s, they made this big decision to try to become more family-friendly.
I get it. Trying to appeal to a wider audience. Makes sense on paper.
It does, but it backfired. They ended up losing that unique identity that made them special. Those core customers, the ones who loved that original bar scene, they felt alienated.
They tried to be everything to everyone and ended up being nothing to anyone.
Exactly. And then, on top of that, they made some risky financial decisions that made things even worse.
You mentioned that earlier, those whole business securitization thing. Can you explain that a bit more?
It's complicated, but basically they tied their franchise royalties to debt repayment. So when things were good, it worked. But when the economy took a hit, like in 2008 with the recession, and then again in 2020 with the pandemic, their sales dropped and they just couldn't keep up with their debts.
It all came crashing down.
It did. And it's a cautionary tale for any business, really. You have to know who you are, what your brand stands for, and you can't make reckless financial decisions, especially in the restaurant business, where things can change so quickly.
Makes sense. Okay, enough about struggling restaurants. Let's jump back into the world of high tech, where NVIDIA is currently dominating the data center GPU market.
They are on a roll, revenue bigger than Intel and AMD combined. And the fuel behind their success is, well, AI.
Yeah, their GPUs are specifically designed for the kind of heavy lifting that AI requires, machine learning, all of that.
Right. They're the ones providing the tools that are powering the AI revolution. And the demand for those chips is just skyrocketing across all kinds of industries.
They really saw this coming, didn't they? They positioned themselves perfectly.
They did. They invested heavily in research, partnered with the right players, and kept expanding their product line to meet the growing demand for AI solutions.
But they're not the only ones in this race. We've got AMD, Qualcomm, they're all making big strides in AI too.
Oh yeah, the competition is definitely heating up. Other chip makers are seeing the potential, and they want in on the action. Qualcomm, for example, they're really focusing on using AI in cars and all those Internet of Things devices.
Right, drones, smart cameras, all that stuff.
Exactly. But for now, NVIDIA is still the one to beat.
You know, speaking of NVIDIA, there's that story about their CEO, Jensen Huang, and the missed opportunity that, well, I think it highlights something really important about taking risks.
Ah, you mean the one with Mansa Son's offer.
Yeah, that's the one. Refresh our memory. What happened there?
So back when NVIDIA was just getting started, not many people knew about them, Mansa Son, the guy who founded SoftBank, he saw something special in them. He became one of their first investors.
And this guy, he's made some really smart investments over the years, so that says a lot.
It does. And at one point, he actually offered to lend Jensen Huang money to buy even more NVIDIA stock. I mean, that's how confident he was.
Wow. And what did Jensen Huang do?
He turned him down. Later, he admitted that it was a missed opportunity, and you can't help but think, what if he had taken Mansa Son up on that offer?
It's a lesson for all of us, really. Sometimes you got to take those chances, even if they seem scary. You never know what you might miss out on.
Especially in tech, where things move so fast, you have to be willing to take those risks, to trust your gut feeling.
Okay, let's shift gears one last time. Let's talk about Starbucks and their struggles in China. They're facing some stiff competition from this local company, Luckin Coffee.
This is a great example of how important it is to understand different cultures and markets. Starbucks, with their whole third place concept, personalized drinks, and higher prices, it hasn't really resonated with Chinese consumers in the same way.
So what's different about the Chinese market? What are they doing wrong?
Well, in China, coffee is often seen more as a quick pick-me-up, not a leisurely experience. And Chinese consumers, they tend to be more price conscious. They want convenience, which is exactly what Luckin Coffee is giving them.
So Luckin is doing things differently to appeal to those preferences.
They are. They have a smaller menu, not as much customization. Their prices are way lower, and they've gone all in on delivery and mobile ordering. It's all about speed and convenience.
Smart. So how is Starbucks trying to fight back?
They're experimenting, trying smaller stores, expanding their delivery options. They're even thinking about selling a part of their China business to private equity firms.
It's a tough market to crack. It'll be interesting to see if they can adapt and turn things around.
It's a reminder that even the biggest, most successful companies in the world have to be flexible. If you don't adapt, you risk getting left behind.
All right, before we move on to our final part, any thoughts on these stories so far? What stood out to you?
What surprised you? What are you thinking about?
Keep those thoughts in mind. We'll be back soon to wrap up our deep dive and explore all of this in even more detail. And we're back for our final part of this deep dive. Looking back, it's amazing how these stories we've talked about, they all kind of point to the same idea.
Yeah, this need to adapt. to change with the times.
Exactly. I mean, we saw it with TGI Fridays trying to shift their focus and it backfired. And then there's Starbucks trying to figure out how to win in China.
And it's not just about companies either. Think about those people who spent a whole day in the woods with just AI for company.
Right. That was a pretty extreme example of adapting to, well, all this new technology that's changing our lives.
It makes you think, doesn't it? Can AI really be a companion? How does it change the way we interact with the world around us? These are questions we're all going to be facing more and more in the future.
No doubt. And then there was that story about Jensen Huang turning down that offer from Masa Son. Shows that even in the world of tech, you got to be willing to take chances.
Absolutely. Sometimes the biggest regrets are the ones where we didn't take that leap of faith.
And on a bigger scale, we're seeing whole industries having to adapt. The shift in global trade, with Mexico becoming the U.S.'s biggest importer.
Yeah, that's a huge change. It's going to have all sorts of ripple effects, from supply chains to investment opportunities, even the balance of power on a global scale.
It really shows how interconnected everything is. So, as we wrap up this deep dive, I want to ask you, our listener, what are your thoughts on all of this?
What stood out to you? What surprised you?
What will you do differently based on what you've learned? Because at the end of the day, that's what we hope to achieve with these deep dives. Spark your curiosity, give you some knowledge, and maybe help you navigate this crazy world that's constantly changing.
Keep asking questions. Keep exploring.
And most importantly, keep adapting. Thanks for joining us, and we'll see you next time on The Deep Dive.